Hello and welcome back to Crypto Saving Experts, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess and we do these live streams every single weekday. So if you are new here, please don't forget to like, subscribe and hit that bell notification button so you don't miss the latest cryptocurrency news. We have some major stories to talk about today. We're going to be talking about the 60,000 Ethereum that could be dumped onto the markets from an Ethereum whale who has been dormant for the last 8 years. We'll also be taking a look at the Federal Reserve's new payment system, FedNow, and we'll be seeing how Gary Gensler is defending the SEC. Now, the SEC is under a lot of scrutiny right now following it losing that battle in court around XRP being a security or not. We have that lawsuit obviously needs to go on for a little bit longer, but things are heating up right now in terms of cryptocurrency regulation. It's all looking pretty interesting. But first of all, before we get onto the cryptocurrency news, let's take a look at the price of Bitcoin. So Bitcoin is down 0.4% in the last 24 hours. Ethereum is down 0.65% within the last 24 hours. They have both seen a move to the downside. We can see some more fears spreading across the markets. But right now, from my perspective, Bitcoin is still within that $2,000 range. So Bitcoin entered a $2,000 range on the 21st of June, I believe it was, if we take a look at this. So we've been between the $29,500 level to the $31,500 level for an entire month now. Yep, now we have not yet broken through that level of support, so I'm not feeling super bearish about this. And until we do break through that level of support, I won't be. If we break down below it, then I'll be looking for some lower price targets. But right now, we are still within that price range. So I'm just keeping an eye on it and seeing what it does from here. We also have that higher price range at $31,500. We're just moving within that zone at the moment. Something that we did actually anticipate here on the channel. We've been talking about the price of Bitcoin in the long term for a while now. And when we saw those big moves to the upside at the start of the year, we saw some huge potential for Bitcoin. We are all bullish on Bitcoin here at Crypto Saving Expert, but from my perspective, I'm looking at this and I'm not expecting the 4-year cycles to change. And with that in mind, I'm not expecting a high until around mid 2024. So with that, we have some sort of limit on how much upwards potential we have this year. And with the amount of negative news stories that came out at the start of this year, we saw how low Bitcoin was really going to go, in my opinion. So this left us with a pretty tight range of what Bitcoin could do for the rest of the year. So I did warn you all then, we probably will see some sideways action because we've not really got too much movement to make. And this is exactly what we've seen for the last month. The time is ticking though, and we are getting closer and closer to that Bitcoin halving, where we have previously seen the Bitcoin bull market really start to take off. So we are waiting till then. That is anticipated to be in April 2024. So holding on till then. Things are heating up though. Things are looking pretty good. Let's see what's going on in the chat here. Good morning, Robert. Good morning, 777 and Jason, all the way from Australia. Let's see what's going on here. Jason says, how long do you think it will stay the $2,000 range for? We will be discussing that at the end of today's stream. We'll be analysing the price of Bitcoin at the end. But first of all, we need to talk about what's going on in the cryptocurrency news. So first of all, we have this Ethereum whale selling $116 million worth of Ethereum. Now, this investor actually bought in during the ICO period in 2014, so when Ethereum first launched. And they bought over 60,000 tokens for less than $300,000. Now, those tokens are worth $116 million. Now, this wallet address has actually been dormant for the last 8 years. And knowing all this, by the way, is due to the transparency of the blockchain. This is why we all think it's such a brilliant tool here. So we can see that they have been dormant for 8 years and they have now sent those tokens to Kraken. Now, there are two possibilities here. The first one being that they are selling their tokens. They're dumping their 60,000 Ethereum, their $116 million, and they're just getting out of here. The second being that they are going to stake on Kraken. Now, that is something I highly, highly doubt. If you're getting in during an ICO period and you're hodling for 8 years, I think you know what you're doing enough to stake on the actual network and not stake through a centralized exchange, which has all of those additional risks. So from the looks of things, they are looking to sell the markets, or at least spook the markets and create some downwards pressure. From this though, I don't expect too much of a price change for Ethereum. If you're looking at the market cap of Ethereum compared to this whale's holdings of $116 million, it could be on my end. Let's see what's going on here. Looks a bit funky. We'll see how this plays out. It looks like we've stopped for a second. Let's see if we can bring it back. Let's see if we can close some tabs down that we do not need. So we can get rid of this one and this one. Let me know in the chat if there are any problems with today's stream, if we are lagging at all. It looks on my end like we're back in action. If you do want a swag bag, this is what he's talking about. If you're based in the UK, Robert, message me on Twitter at Interpret Crypto, and I will try and get one of these sorted for you, because you're in the chat every single day. We also include in those bags some paper notepad things with the logo on, some cool sort of, that's not focusing at all. There you go. And we also have some Crypto Saving Expert air fresheners, which I really like, in 2 cents, raspberry and new car. Anyway, back to the news, back to seeing what's going on here. Should be back now, better now, all sorted, thank you. I'm not sure what happened there at all. Let's see what's going on. Let's continue with today's news anyway. Before we continue, please don't forget to like, subscribe, and hit the bell notification button so you don't miss the latest cryptocurrency news. Let's see what's going on in this next story here. So the Federal Reserve have launched FedNow, their instant payment services. So we are seeing a number of banks and credit unions actually taking advantage of this new payment system, including JP Morgan. So what does this actually mean? Now, this has been highly anticipated, and what we can see here is the Federal Reserve Chairman has said, over time, as more banks choose to use this new tool, the benefits to individuals and businesses will include enabling a person to immediately receive a paycheck or a company to instantly access funds when an invoice is paid. So what is happening here is this: we still have some lagging when we make payments through traditional systems. So when we make a payment, it sometimes can take a few days for that payment to be processed. But with FedNow, it can be processed within minutes and at any time of the day. At 24/7 this runs. Now what's going to actually happen is we can't just use this payment system from peer to peer like Bitcoin. That's a benefit that only Bitcoin can provide right now. This is actually a benefit for the banks. So the banks will be using this, taking advantage of this, and then the benefits of this will filter down into those bank users essentially. So it has been highly anticipated. And we can see here at the time of writing, it is still unclear how the participating financial institutions will implement FedNow or whether using it will incur additional fees for retail customers, but the Fed will not charge the financial institutions that use FedNow. So it will be adopted by more than 9,000 US banks and credit unions, according to this article. So a lot of adoption occurring here, but it's still nothing on Bitcoin. We want peer-to-peer payment systems. So this is what's happening there. It's highly anticipated. It's a very, very interesting new technology where the banks are looking like they are getting involved in that and adopting it while they can. But let's continue now on to the next piece of news and see what else is going on in the markets here. Let's pull this up. Let's make sure everything's running smoothly. Now on to talking about Mr. Gary Gensler. So Gary Gensler, the chairman of the SEC, has been having an absolute nightmare in his career in the last year. So what we've seen is the SEC regulates securities, and the cryptocurrency industry is having a hard time determining whether assets are securities or commodities, because the framework to use to determine whether an asset is a security or a commodity is the Howey test that was created in 1946, which is very, very unclear when you try and apply it to digital assets. So with that in mind, the SEC have been giving the cryptocurrency space a bit of a headache. Now we've seen obviously FTX collapse last year, and that has invited a huge amount of regulation into the space. And I agree that regulation is something that is really important for the space and something we need to help the industry grow. But the way the SEC have been regulating the space in the last couple of years, I believe they've been looking at it in the wrong way. So we have obviously FTX, we have Celsius, these companies that did not make it through 2022, and it's since come out that their CEOs and founders were defrauding all of their investors and users. So with that in mind, we want to regulate the cryptocurrency industry to filter out these people. The people that own Celsius, FTX, those people managing these companies completely wrong and taking users' deposits and using that money in a way that they shouldn't and gambling that away. Those type of companies should be regulated correctly, and we should have regulators in to ensure that that is not happening. What we are seeing though instead is Gary Gensler going after many different cryptocurrency projects, saying they are securities. Now we did see last last week, obviously, XRP win in court against the SEC to determine whether an XRP is a security. There was 4 instances in that court case. So it was to determine whether an XRP is a security when it is being bought by institutions from Ripple, when it is being bought from retail investors on centralized exchanges, when it is being given to Ripple employees as bonuses and things. And then finally, when it is being paid from the CEO and founder, Gary Garlinghouse. Now, what we have seen is that the courts determined XRP is not a security in 3 of those 4 instances. The one transaction that has been deemed a security is when institutions get involved and institutions buy tokens off Ripple, because essentially they meet the 4 conditions of the Howey test. The prong that wasn't met by the other 3 is that when institutions invest in XRP directly to Ripple, they're expecting returns based on Ripple's efforts. Now, that can't be said for the other 3 instances, so they do not meet the Howey test conditions. So what we have seen here is Gensler is defending the SEC in Congress and requests more funds to tackle crypto Wild West. So he's actually requested $72 million budget increase. Now, he has referred to the cryptocurrency space as the Wild West here. He said, as the cop on the beat, we must be able to meet the match of bad actors. Thus, it makes sense for the SEC to grow along with the expansion and increased complexity in the capital markets. Later, during the question session, a senator raised concerns about the severe overreach of the SEC under Chairman Gensler, saying how much funding would the SEC need if it weren't trying to do the job of the Congress, the EPA, the banking agencies, if it weren't bringing enforcement actions that are likely to be lost. So you can see here that there's still a problem understanding what type of things the SEC should be regulating and what it shouldn't. So as I've been saying, we have this problem with the Howey test to determine whether assets are securities or commodities. We have an overlap in the US in terms of regulation of cryptocurrency, because commodities are regulated by the CFTC and securities are regulated by the SEC. But right now, there's some sort of overlap. Now, we have this framework to try and divide those assets into 2 and divide that regulation amongst the 2 regulators there. But because that framework is not clear, it's causing problems not only for the cryptocurrency industry and people like you and me and people that are trying to develop their projects, but actually for the regulators themselves, because the regulators themselves can't agree on whether these assets are securities or commodities. And we have just seen the SEC lose in court against Ripple around XRP to determine whether XRP is a security or not. So the courts are saying XRP is not a security, and the SEC is saying XRP is a security, both of them using the same framework. So with that in mind, that proves that that framework is not clear for digital assets. And that's what we've all been trying to fight for in the cryptocurrency space for years. Bringing this back to Coinbase. Coinbase is a cryptocurrency exchange based in the US. I need to turn that pinging off because it keeps going off on my phone. There we go. So Coinbase is a cryptocurrency exchange based in the US. Now, Coinbase have been asking for some clarity on cryptocurrency regulation for years. The SEC have said it's already here. Coinbase have been saying, no, it's not clear. So we're making our own framework. We'll share that with you. If you have any problems, let us know and we'll fix it. If you don't, this is how we're going to operate. The SEC then said that Coinbase was okay and it could launch as have its IPO, go on the public NASDAQ exchange, listed as a public company now under the ticker Coin. And then now they've all of a sudden decided that Coinbase are not doing things properly, and that framework that they knew about prior to the company launching as a public company isn't correct. It's not working. The regulation has not changed. Coinbase have not changed their framework. The SEC have just changed their mind. And that's the problem that we are seeing here. Now, Coinbase is... The SEC chairman Gary Gensler is still saying that the majority of cryptocurrency assets are securities, even though they lost against XRP last week. What we are seeing here is the judge last week said there is nothing about XRP token that makes it inherently a security. XRP as a digital token is not in and of itself a contract, transaction, or scheme that embodies the Howey requirements of an investment contract. Ruling implies that the specific circumstances under which an asset is sold makes it a security, a subtlety that Gensler continues to ignore. Now, Gensler has been questioned over the FTX scandal. So he has been asked, Mr. Chairman, why did you and the SEC allow the FTX fraud to happen? Like, as I said, These are the kind of things that the SEC and regulators are here to stop. So we can see here, Gensler replied that crypto firms frequently commingle bundle services, are often based overseas, and are rife with abuses and fraud. He explained that the enforcement actions also take time to construct, and actions were taken against many other companies. But the senator said, but the cow was out of the barn. Here you have this company, FTX, run by a young man who has more zeal than wisdom, reeks with arrogance. Where was the SEC? I mean, this was an accident waiting to happen. And we can see here that Kennedy said, we've got tens of thousands of people who lost a lot of money, and they look at you, at this young man, and they go, how did the regulatory authorities allow this guy to function? I mean, his Secret Service name is Butthead. That's how bad he is. Where was the SEC? And Gensler explained that the entire crypto sector is run with illegitimate models, that the SEC brings enforcement and investigators by the book. Gensler's main defense was that the enforcement actions the SEC did take were time consuming, and Senator Kennedy said you could have gotten an injunction half a day. So what we are seeing here is Gary Gensler is saying they are underfunded, they need more money, they need more time to fully regulate the cryptocurrency industry. And what we are seeing here is a continuous lack of clarity around cryptocurrency regulation. How they should actually be regulating the industry is different to how they seem to be regulating the industry. There's lots of problems to come here for the SEC and for Gary Gensler. Let me know in the chat, do you think Gary Gensler is going to be the chairman of the SEC in 1 year's time? Is he going to be able to stick around through this turbulent time with all the problems he has created? It'd be interesting to know here. Before we continue with today's stream, please don't forget to like, subscribe, and hit that bell notification button so you don't miss the latest cryptocurrency news. Let's take a look at what else is going on here. So we have the Nasdaq have halted plans to launch crypto custodian services. So what we can see here is the Nasdaq was going to launch a service which basically was a crypto custodian, but they have decided that they are not going to do that. So right now they are putting that on pause for a second. So the shared this quarter, considering the shifting business and regulatory environment in the US, we have made the decision to halt our launch of the US digital assets custodian business and our related efforts to pursue relevant licenses. So they've just put that on pause in second, obviously with regulatory concern. We see that over and over again. Let's continue with today's news and see what else is going on. Before we do, please don't forget to like, subscribe, and hit that bell notification button. We're going to run through the rest of the news pretty quickly, and then we'll get onto the price of Bitcoin and see what's going on there. So first of all, what do we have here? We have the US users dominate web traffic to CoinMarketCap despite regulatory uncertainty. So although we have all of this concern around regulation in the US, the US cryptocurrency users are still adamant that they want to be involved. I mean, I wouldn't let this regulatory concern deter any retail investors at this point. It's just showing us who we can trust in the space, who we can't, and what problems can arise. It's making the cryptocurrency markets at the end of the day, and volatility is something that attracts users. What we can see here is the regulatory headwinds in the US caused by the SEC and CFTC have done little to dampen enthusiasm in the crypto sector from individuals in the country. Now, this is great to see. We always talk about this in a little bit more detail. In the long run, question for you. In the long run, is FTX a net positive or net negative for the cryptocurrency space? Now, I speak to a lot of people that aren't involved in cryptocurrency. If somebody asks what I do for work and I say, oh, I do crypto, a lot of people say, oh, didn't that big company go bankrupt last year, meaning FTX? And I say, well, yeah, it did, but we've moved on from that. We've learned from that, and it's a new industry. With new industries, there's going to be teething problems. And what we see is a lot of people that are outside cryptocurrency hear about FTX because it was all over the mainstream media, and it has deterred some people away from the space or given people another reason to be fearful of the industry. And that's something I see a lot. However, we also did see a negative that a lot of people lost a lot of money, and I feel very sorry for those people. I mean, it's a very unfortunate circumstance. How were they to know? But we also have to see that this has created some exposure for the cryptocurrency space. Is all exposure good exposure? We are also seeing a step in the right direction in terms of the space needed to get regulated at some point. And now that we're going through this battle with the SEC and we're seeing all of these problems arise, this was always in the pipeline. This was always something that was going to happen. And now we have just started that process. So in the long term, I think it's something that was going to happen anyway. And for me, the sooner we get through the headwinds, the better. Also, Another benefit that this has provided is that it's taught a lot of people about how to store their cryptocurrencies safely. It's caused a lot of centralized exchanges to start producing monthly and proof of reserves. And we're seeing a lot more transparency in the cryptocurrency space. Now, this is something a lot of people come into the cryptocurrency industry for. So it's really good to actually see this wake-up call for everybody to realize that this is still something we need in the industry. So overall, maybe FTX was a net positive. And since then, another benefit here is that you can see is that it hasn't actually deterred too many people away from the cryptocurrency space throughout this regulatory concern in the US. So that's really important there. Let's continue on to the next one here. So Britain's finance ministry opposes plans to regulate crypto as gambling. Now, this is something that was suggested a month or two ago in May 2023. Now, this is something that we had a big conversation about this in Crypto Saving Expert. Determining cryptocurrency to be gambling is, for me, absolutely crazy. I mean, I get very, very frustrated when people say cryptocurrency trading is gambling because it's all based on probabilities and there's a lot more research that goes into it. But what we are seeing, my question was, if they're going to say crypto is gambling, is it going to be tax-free? And that was my first question. And then we raised the point that let me try and get my words out. It makes cryptocurrency seem like it's nothing special, like it's not this brand new technology that allows peer-to-peer payment systems that are decentralized, that are transparent, that have these consensus algorithms that help us provide this network and this blockchain technology that can disrupt many different industries. It just illegitimizes it. It makes it seem like nothing when it's a really important tool that we can use and adapt into many different industries. So this is not something I wanted to see here, but we have thankfully seen the UK's Economic and Finance Ministry state that it disagrees with the Treasury Committee's May 2023 report that recommended regulating the crypto industry the same as gambling rather than a financial service. So we are still seeing concerns about regulation all around the world, not just in US, and we're seeing disagreements as well. We are seeing some institutions trying to get some global clarity on the cryptocurrency space, but when each region is struggling to come to a decision between themselves, I think global regulation is a big ask. If the US can't agree amongst themselves, the UK can't agree amongst themselves, how is everyone going to agree on a decision with how to regulate the space there? But let's continue on to the next piece of news here. Before we do, please don't forget to like, subscribe, and hit that bell notification button so you don't miss the latest cryptocurrency news. What we can see here is Terraform Labs appoints a new CEO as Do Kwon faces fraud charges. Now, Do Kwon has been charged with a long list of charges within the last couple of months. Do Kwon being the founder and CEO of Terraform Labs, the company that had Terra, Luna, and UST, which depegged from the dollar back in May 2022 and wiped billions out of the cryptocurrency space. Now we have a new CEO coming in, stepping in to see what they can do here. Now, again, this is a similar situation to FTX. With Terraform Labs and with FTX, they had bad actors at the top in the space, but what we can see is they actually still have that infrastructure. And if we have that infrastructure for a centralized exchange for FTX or for Terraform Labs, that entire company, if we take out the bad actors and we put a new CEO in, can it operate and do some good and be a profitable business? That's the question we're seeing right now. A lot of people are very concerned about FTX relaunching as a centralized exchange, say they won't use it. I think after a name change, after a CEO change, when all the bad actors are at the space, it's just as much of a centralized exchange as the next one. It has all the infrastructure there ready to go. If I were the CEO of FTX now, I wouldn't want to throw that away. I'd want to use that infrastructure that's already built. You have a fully working company ready to launch, and you'd want to launch it, I reckon. And that is something that the new CEO of FTX has not ruled out the question. Let's continue now on to the next article here. So Radiant Capital, a cross-chain DeFi lender, secured $10 million worth of investment from Binance Labs. The venture capital arm of the renowned crypto exchange Binance recently invested $10 million in Radiant Capital, a cutting-edge cross-chain lending and borrowing protocol. So Binance Labs have been investing in many different cryptocurrency projects since the bottom of the bear market there, and trying to pump money into this space to help it grow and help us build during the bear markets, because that's what bear markets are for. Let's continue now though. So we've got another article here. FTX administrators seek recovery of $71 million from its I'm not even going to try and say it. What we have seen here is FTX administrators trying to seek recovery from many different payments and loans throughout the period of time that FTX was a sufficient company. And what they are doing now is FTX have a huge amount of liquid assets right now. We did an article on this a couple of months ago. If you actually take a look at their full amount, so we can see here FTX pursue $700 million recovery. The lawyers filed a lawsuit seeking recovery of $700 million in payments made to two people by SBF, including to build a close relationship with the duo described as super networkers. Some of the payments were made to companies controlled by the pair. Now, what we are seeing is, again, FTX trying to make a huge amount of the money back that they lost through SBF's incapabilities of being a successful founder and CEO. And in that process, they are building a huge amount of liquid assets, which could be used for FTX 2.0. Let's continue on here. We have investors near $125 million acquisition deal for CoinDesk. So the investors are in the final stage of the deal to take over CoinDesk, the news outlet. And we can see here that Wall Street Journal have reported on Thursday that this deal is looking like it's going to come to an end. So big news there, huge valuation there. So very exciting that. Let's continue on here. So we have seen crypto investors lose $219 million to exit scammers in the first half of 2023. Obviously, this is not what we want to see, but to be honest, this seems pretty low. If we compare this to other half years, I like to work in quarters, not in halves, but we can see here, let's see what's going on. Also known as exit scams, rug pulls refer to a situation where developers promote a project to attract investor money, suddenly to disappear with the pool of investors' assets. Now we can see here that a lot of people accuse cryptocurrency of being a way in which people can defraud investors. Rug pulls are unfortunately adding to that reputation. But we can see here that there has been a decline in the total value of crypto laundering within the last couple of years. We can see here the blockchain security platform noted that approximately $244.5 million in stolen Ether and BNB were laundered through the mixing protocol Tornado Cash in the first half of 2023, representing a 91 and 31.3% decline from the previous record in 2022. So we are seeing a decline in money laundering in terms of cryptocurrency. And if you actually take a look at the amount of cryptocurrency transactions and the amount that are listed as money laundering compared to that of cash, it is relatively low as well. So all of these people that say cryptocurrency is a scam, back to 2017 when the BlackRock CEO said Bitcoin is an index for money laundering, we could all say you're wrong. Look at the data, look at the facts. But let's take a look at the price of Bitcoin now and see what's going on here. So we are still within that $2,000 range at $29,500 to $31,500. We are still seeing that range now. We've been in this range since the 21st of June, one entire month here. Now we have not yet broken through this level of support at $29,500. So I'm waiting to see what happens here, but we are playing pretty closely with this $29,900 level. This blue line here, you can see, has been acting as a level of support here throughout that month. We did now break down below it once again. We used it as a support here slightly on Wednesday, but we've now used it as a level of resistance. Now that is not what we want to see. If we see a 4-hour candle close below that $29,500, that's the point in which I'll start looking for some bearish price points. So I'm just keeping a close eye on that. But until then, I still think we're in between this range of $30,750 to $29,500. But that is what we're looking at here. We also have the CME gap opening tonight, so let's talk about that quickly. What we can see here is BTC. If you go to TradingView and you put in BTC $1 and you get Bitcoin futures chart here, you can see the CME gap. So these are the gaps that are created over the weekend when the Chicago Mercantile Exchange is closed. As you can see here, this weekend just gone. Let's find it. It is here. So we have a gap in the markets when the market closes on the Friday until the markets open on the Sunday night. And that gap acts like a magnet for the Bitcoin price. We are edging closer and closer to that $35,000 gap, by the way. If we take a look at this, we have one up at $35,200 and we have one down at $20,300. But both of these acting like magnets. I mean, obviously the $35,000 level is closer. This volatility that we're seeing within this current range is something that I'm not against. What we always see is when Bitcoin's had some sideways action, when we've seen some movements across, typically we see some volatility before we see a breakout. Bitcoin takes the path of least pain. It's not going to just decide, oh yeah, it's time to continue up now on that nice move to the upside. What we're going to see is some volatility, liquidate some longs, liquidate some shorts. That's what Bitcoin likes to do here. So let's see what's going on here. So Jason Smith said, unfortunately, this is the opinion of the Australian government, and they look at leverage trading as gambling too. Leverage trading is derivatives trading is banned in the UK as well. So Jason Smith says crypto life in Australia sucks. That's not nice to hear, is it? We want positive things about crypto. I'm going to Australia later this year, actually. Let's see what he got to. Robert says, I hope he gets the sack. I'm assuming you're talking about Gary Gensler, the incompetent chairman of the SEC. We are also seeing here, Frankie's Candle says, you're doing fantastic, young lady. Thank you very much, Frankie's Candle. Let's see what's going on here. Finally, on the CME, we are going to have to wait and see how that daily candle closes. Let's take a look at Ethereum quickly before we close off today's stream. We've got to set off in just a second. So let's take a look at this. On the daily chart, we are still seeing some movements to the downside. If we take a look at Ethereum BTC, comparing the assets here, you can see Ethereum's been holding strong against Ethereum for the last week or so. Now, Ethereum was being outperformed by Bitcoin from back on the 6th of June all the way down to the 29th of June. And we have seen some nice bounces here. So I'm keeping a close eye on that. But what we will see in the next couple of weeks, hopefully, is a decision on this price range here. Jason Smith asked earlier in today's stream, when do you think we're going to see a breakout from this $2,000 range? To be very honest, it's hard to say at this point in time. As I've been saying for a while, I am expecting sideways action this year. And with that, we may see some we could see a break to the downside. If you take a look at the daily chart here, you can see on the reset price, if I reset this price scale, we have a level of support here from the 31st of December, the 10th of March, and the 15th of June. So if we see a break to the downside, we have a huge amount of levels of support here. One major level of support that we do have, though, that is edging closer and closer is the $27,440 level right now. And that's coming from that inclining level of support. Now, we also do, if we zoom out to the bigger time frame, we do have some things to be positive about. Let's go to BTC USD quickly so we can zoom out a little bit further. If we go to the daily chart here and we zoom out for what's happened in the last bull market, you can see that this price range here, from this point here at $28,700 to around this point here at $32,000, I would say. I would actually like to pull that up a little bit more. We can pull it up to 32.2. So you can see here that's been used as a support in the previous bull market over and over again, and has actually been used as a level of resistance on the way down. If we look at that price range here, that's the point we are in right now. Now, I don't think it's going to be easy to break through this level of previous support, but when we do, it could be a massive move for the price of Bitcoin. Bitcoin is known for this. We see some volatility, we see some nerves within the markets, and then it absolutely explodes. Don't forget, we have that Bitcoin halving in April 2024. So in the long term, I see many, many reasons of feeling positive. And when you look up at the bigger time frames like this, it makes you realize a retest to that $28,750 level, is that the worst thing ever? And if we do see a retest of that level of support from down here, if we pull this all the way out, that comes up to $27,300, would that be the worst thing ever? No, it wouldn't. I mean, we seem to get pretty sharp rejections from that level of support, so hopefully that holds. But from now, I think that's all we need to talk about for today's stream. So thank you very much for tuning in, as always. Good morning, Randy. Thank you very much for tuning in again. That's all we have time for today. Thank you very much for watching. I won't see you all back here tomorrow. I'll see you all back here on Monday. I hope you all have a lovely weekend.